area, and I am with you with the area of AFM, Accounting and Financial Management for Bankers, JAIIB 2023 attempt. Okay, so when we are looking forward towards this area, today I'm going to cover the next set of journal entries. So let's understand the journal. Okay, our Christmas sale is still going on. What you can do is you can check out it on our website at this point of time. The current validity of 80% is going on. Double validity is there on our Maha packs. All you can do is to look forward to this particular offer. All you can do is you can use the code Y541 and get the discount of 81% as well as the double validity on our Maha packs. So this offer would be ending soon, so kindly go ahead and check it out on our website or in our app as early as possible, as JAIIB Maha packs are there. CAIIB, JAIIB and CAIIB Maha pack is also there, about which I'll give you the details in the end. So kindly hurry up. Okay, so in the last class we talked about the columns now, the format. The format looked like this. We first of all write the date, then we write the particular, then we specify the table number, then we have an area called debit, then we have an area called credit. The particulars are stated in such a way that first of all we specify the date in a sequential manner. Then in terms of particular we specify dash, account, debited, to, dash. So the debit item is stated here, item number 1, and then credit item is stated here, that is item number 2. There in the lower area we specify the theoretical portion, which we call the narration. Clear, everyone? Then here in this area we specify the amount for the debit thing, here we specify the amount for the credit thing. So this is how we define the entire accounting system in terms of their theoretical noting down. Okay, today we'll be talking about the next set of journal entries. So let's talk about the various journal entries. First is purchase of an asset. If I purchase an asset, what would be the journal entry? Okay, our assets are increasing, so I'm getting a particular asset. For example, I buy furniture. So if I buy furniture, the journal entry for that would be I receive furniture, so it would be furniture, account, debited, and since I'm losing money, it would be to cash. That is furniture account debit to cash. Debit what comes in, credit what goes out. So that's the point. Or you can say when the asset is increasing on the debit side, when the asset is decreasing, it would be shown on the credit side. All, if you cannot remember any of these, just follow cash. If cash comes in on the debit side, if cash goes out on the credit side, and whatever the reason is, note it on the counterpart. That's one of the ways that I've been using whenever I was in a hurry and I was noting down a particular journal entry. And this particular trick normally works out. So if I purchased furniture, say for rupees 1 lakh, I've got the furniture now and I'm losing cash. So I'll note it down as 1 lakh rupees here. Then after a certain period of time, I sold that furniture. That means I currently got cash. So what if I got 90,000 rupees? Okay, let's do the first point. I received 1 lakh rupees only. So I have received cash, but this time I lost my furniture. So cash to furniture, right? So my journal entry would be 1 lakh. There is no profit, no loss. In the second scenario, what will happen is, it would be number 2. If I receive cash worth rupees 90,000, then what? This is cash account debited 90,000 to furniture. The furniture costed rupees 1 lakh. That means my debit and the credit side is not matching. This is a different kind of entry, isn't it? This is called a compound entry. Here what is happening is our furniture was worth rupees 1 lakh that we have lost, but we have got only 90,000 for that. That means the remaining part is my loss. Loss on sale is rupees 10,000. So it is cash account debit rupees 90,000, loss account debit rupees 10,000. The furniture that we lost was of rupees 1 lakh. So the journal entry would simply state that losses are on the debit side, and if there would be a profit, it would be on the credit side, which is the balancing figure here. The balancing figure is noted here, right? So this is the balancing figure which we'll be noting down in order to record the journal entry, right? So that's how we record the portion where if I receive cash, I received cash of 90,000, but I lost goods of rupees 1 lakh. So the difference is because there is a loss for rupees 10,000. Then what if I made a profit? What if? So the what if would be stated here. Okay, let me just make it a little clearer for you. So what can we do? If I received cash, but here I got 1,20,000 rupees. I have got 1,20,000, but the value of the furniture was 1 lakh, isn't it? I got it for 1 lakh. Now I'm selling it for more. So how does it matter? The furniture costed me rupees lakh. So if the furniture costed me 1 lakh, now you can see there's a clear difference here. On the debit side, you have 1 lakh 20. On the credit side, you have 1 lakh. So here it would be profit on sale. The profit on sale was of rupees 20,000. The journal entry would be correct if we look forward to it this way, that when you receive money, it is on the debit side. If you lose money, it's on the credit side, right? That is sorted. Then if you have a loss on sale of an asset, it's on the debit side. When you have a profit on sale of an asset, then it would be shown on the credit side. And it is because these are the balancing figures, nothing but the balancing figures, right? These are the balancing figures which helps us to understand what exactly accounting is all about. Okay, now let's look forward to drawings. Drawings refers to the amount that I withdraw from my business for my personal use. But how do we record this particular transaction? The best way to record is, see, if I take the goods out of the business or cash out of the business, the journal entry would be varying. Why? Let's look forward to it. If I withdraw cash from the business for my personal use, it would be drawings, count, debited. D for drawings, D for debit. Every time you are having a drawings, it would be on the debit side. And what are you losing? You will be losing cash. So you'll be noting it down as drawings to cash, right? Now, the next point is when we are noting it as drawings to cash, then what next? If I lose cash, it would be on the credit side. What if I lose goods? Now I purchased these goods for my business, but unfortunately these goods are not used for my business, right? If it is not used for my business, then what will I do? Right? So the journal entry would be drawings to purchases. So in this case, the correct answer would be, if we are losing cash, then record it. If we are losing goods, then record it accordingly. So whenever we are recording the books of accounts, we need to see what exactly are we losing from the books of accounts in order to understand the entire working, right? So that is drawings according to the entire scenario. Drawings is the money that I take out of the business for my personal use. Okay, now let's move on to the next point. I take up, for example, if I took goods out of the business, these goods were purchased, so that is purchases. So when we look forward to that, that is purchases according to us. Right now, these goods were purchased and goods are lost. What if I took out furniture for the business, which was really good, and I thought I'll use it in my house only. Now that would be drawings for me. That is drawings account debited. 2. I'm losing my furniture. So I'll note it down. Whatever I'm losing is on the credit side. Be it cash, be it purchases, be it furniture. Anything that I'm losing because I am having drawings for the business. D for drawings, D for debit. That means whatever amount that we're taking out of the business for our personal use is stated as drawings. So that particular amount would be created in our books of accounts. So this is the journal entry for drawings. Okay. Now, what is the journal entry for noting down the expenses? Whenever we are having expenses in the business, how do we note it down? The journal entry is debit all expenses and losses, and credit all the incomes and gains. But if we are incurring an expense, what do we lose? There are two elements now. One is in terms of an expense, we are doing that expense, but in order to pay for it, we are paying in cash. It is considered as expense to cash. So that's how we record the journal entry that expenses are debited and the cash is credited. I don't pay yet. If I haven't paid yet, then there's a burden on my head. Oh, I am supposed to pay that. For example, if I've paid the salary, I'll note it down as salary account debited to cash. That's the journal entry. What if I didn't pay this time? That means at this point of time, it's a liability on my head. How do we note it down? I'll note it down as salary account debited to. At this point of time, I'll note it down as a liability, that is salary outstanding. O/S is the term that I use for outstanding. So this is the amount that we specify. See, if I lose cash, if I lost my cash, I'll note it down. In this case, I didn't lose cash, I lost salary. At this point of time, it's a liability on my head. I'll note it down as salary. Right? So this is how we record the books of accounts in terms of our expenses. Okay, here comes the next point, that is, how do we record incomes then, if this is how we record the expenses? In order to record the incomes is basically what? It is something that we receive now. So when we receive some money, it would be noted as I am receiving money. So when I record that particular amount, I'll record as cash. Debit what comes in, what is coming to me, cash is coming. So record or track the cash. If cash is coming, note it down as cash is coming. But what's the reason? The income is the reason. So cash account debited to that particular income. For example, rent received. For example, commission received. For example, sales. That is cash account debited to sales. Whatever income you are receiving, that income will always be on the credit side. But now, what if the income is actually not received? We will receive it, but not now. How do we record that point? It would be an accrued income account debited. That is the income which is accrued right now. That is the term. It means this income is due. I have the right to receive it. It's an asset for me. Later on, I'll receive this money. Maybe not today, maybe not tomorrow, but I'll soon receive this income. That is how we define it as accrued income. And two, the point is this would also go into my income only. Na? My income will be increasing as soon as I receive it. The day I receive this amount, this account will be closed. How? Then I'll write it as cash account debited to accrued income. The account which is opened would be closed. So that's how we record the entire portion. Okay, I hope now it would be visible. Cash account debited to accrued income. right? So this would be the closure of the journal entry for accrued income. This is based upon timing. See, currently I have not received the amount, so it's accrued income according to me, and the moment I receive it, it would be uh, closed. This entire account would be closed in my books of accounts. Okay. Another journal entry which plays a very important role in understanding the going concern concept of the business. That is, going concern concept states that whatever men may come and men may go, but the organization is here to stay. On every 31st March, while closing the books of accounts, they are also looking forward to the next day, that is the 1st of April. So the new year is about to begin. So, what do they do? First of all, every asset that is recorded on 31st of March is taken to 1st of April. That means all the assets account debited to all the liabilities would be credited. Assets account debited, liabilities account credited. And now the point is, where would the capital go? Liabilities and capital are always on the same side. Both of them, that is L, I, and C, went to the credit side and all the assets went to the debit side. But why am I not recording the expenses and incomes? These are nominal accounts. That means these nominal accounts are recorded as per that year. If expenses and incomes were incurred in the previous year, that is where we took out their profit or loss. When the profit or loss was recorded, the income and expenditure, both of these accounts were clearly closed in that particular year only. In this year, all we are getting is our cash, our capital and liabilities, and now we'll start our journey again. That means we'll prepare our books of accounts, we'll try to find out what is happening in terms of our incoming money, or if we are losing money, we are gaining money, the profit or the loss again. That is the matching concept. That means here there is no exception. Assets, liabilities, and capital will be taken to the next year, while expenses and incomes are recorded only as per the current year. It doesn't go further in terms of our books of accounts, right? So that's how we end up the area of the opening entry. So I hope this was clear to you. And this is where I end my session for today. But before I end my session, let's look forward to our website and what are we dealing with in terms of in terms of the JIB and CIB packs. Okay. All you need to do is you need to go onto our website, that is www.adda247.com. Here you'll find the area of JIB and CIB. Here in the Mahapacks, you will find all the details of the JIB and CIB Mahapack. There you can see there's a double validity going on. That means you can get any of the Mahapacks, and if you look forward to JIB and CIB, there are 1100 hours of studies, 303 test series, 905 videos, 328 ebooks. Everything available for you in this, including all the subjects, that is for JIB 2023 and then also for CIB. And considering that fact, this particular validity is for 2 years. So once you buy it, all the resources are totally complete for you, right? So all you need to do is you need to click on the area of buy now, and you can use the code Y541, and here you will get another opportunity, that is to purchase it not only on double validity but also at 80% discount at this point of time. If you look forward to our app, it would be at 81%. That is additional benefit for you. So if you're looking forward to it, then kindly hurry up. The offer will not stay forever. Then okay, there's one more thing. If you're looking forward only towards the JIB, that particular opportunity is also there. The batches have just started, so you can join the batches as early as possible in order to have an opportunity to go through the live classes. All you can do is you can check out the timing. See, the class starts from 7 a.m. The last is at 10 p.m. So that is to 10 p.m. So you can look forward to our batches. It's from 7 to 8 p.m. for RBWM. AFM, it's 8 to 9 p.m. IE and IFS is at 7 a.m. to 8 a.m. and PPB is from 9 p.m. to 10 p.m. All the study plans are also uploaded in order to let you know how do we look forward towards this area, right? So the details of the faculty who are teaching in this area is also available for you. You can look forward to this pack as well. The code you can use is Y541 to get a discount of 81%. So it would cost you 3,999.80 and rather less when you are purchasing it through our app. So kindly go ahead and check it out on our website or through our app. So go ahead, everyone, and avail the offers as early as possible. Thank you.